Welcome to our deep dive into Amaze Holdings Inc., ticker AMZE, a stock that's been making headlines for its wild swings and explosive trading volume. Recently, AMZE closed at 0.407, up 1.8% on a staggering 309 million shares traded, over 2,000% above its 20-day average. This action followed the release of Q3 earnings, which showed a jaw-dropping 1,884% revenue growth year-over-year. However, the company's net loss also widened, reflecting heavy spending on platform expansion and merger costs. Let's break down what's driving this volatility and what it means for traders and investors. AMZE's story is one of transformation. Formerly known as Fresh Vine Wine, the company pivoted in March 2025 to focus on creator-powered commerce. This strategic shift included acquiring the food channel assets for $650,000 and extending a partnership with Adobe Express into India's massive $350 billion market. These moves aim to bolster AMZE's position in the culinary and creator economy, but the transition hasn't been smooth. The stock has plunged 88% in just 3 months, reflecting both market skepticism and the challenges of reinventing a business model. Q3 2025 earnings report was a mixed bag. On one hand, AMZE posted an explosive revenue increase to $1.05 million, driven by its new creator platform. On the other, net losses ballooned to $5.15 million or $0.85 per share, up from a $0.32 million loss previously. Much of this red ink came from $4.3 million in selling, general, and administrative expenses tied to platform expansion and merger costs. Investors are now weighing whether the revenue surge can eventually offset these heavy losses as the company targets profitability in Q1 2026. Trading volume in AMZE has reached fever pitch. The latest session saw 309 million shares change hands, dwarfing the 20-day average by over 2,000%. This surge was likely fueled by a combination of earnings reactions, short covering, and excitement over the food channel acquisition. Despite the massive volume, indicators like the accumulation distribution oscillator suggest that institutions are unloading shares, pointing to a classic capitulation trap. Still, with such speculative frenzy, traders should brace for more volatility ahead. Let's look at the price action. AMZE opened at 0.54, spiked to 0.641, plunged to 0.402, and closed at 0.407. The dollar volume hit $126 million, underscoring intense speculation. The VWAP, or volume-weighted average price, was 0.623, meaning the close was at a significant discount. This pattern suggests a market dominated by panic selling and short-term trading, with the potential for a sharp reversal if buying interest returns. However, the risk of further downside remains high. Short-term and long-term moving averages paint a bleak picture for AMZE. The 5-day and 10-day simple and exponential moving averages are all well above the current price, signaling a persistent downtrend. Medium and long-term averages like the 50-day and 100-day are even higher, confirming the stock's dramatic fall from its wine-era highs. The alignment of these averages is fully bearish, with no sign of a bullish crossover in sight. For now, the technicals suggest caution for anyone considering a long position. Momentum indicators reinforce the bearish outlook. The MACD is negative, though its histogram hints at a possible divergence. Other metrics like the rate of change, price oscillator, and TRIX all point to extreme downside momentum. Even so, a slight uptick in price acceleration suggests that a short-term bounce could be possible if enough buyers step in. Still, the overall momentum score remains deeply negative, warning traders to tread carefully. Oscillators like the RSI and stochastic indicators show AMZE is deeply oversold. The RSI 14 sits at 22.6, well below the typical oversold threshold of 30. Stochastic readings are also at extreme lows, with Williams %R and CCI confirming the bearish, but potentially bounce-ready setup. These conditions often precede sharp, short-lived rallies, especially if short sellers rush to cover. However, without sustained buying, any rebound could quickly fade. Trend indicators like the ADX confirm that AMZE is in a strong downtrend, with the minus DI far outweighing the plus DI. The parabolic SAR sits well above the current price, acting as resistance. Volatility is off the charts, with the ATR and NATR signaling massive price swings. This environment is ripe for both risk and opportunity, but it demands a disciplined approach and tight risk management for anyone trading this stock. Linear regression analysis shows a persistent downward slope for AMZE, with the price currently well below the regression line. The R-squared value of 0.801 indicates a strong fit to the bearish trend. The predicted price is 0.61, but the actual close is much lower, suggesting either undervaluation or intense selling pressure. For mean reversion traders, that could present an opportunity if volume remains high and selling exhausts. Looking ahead, technical models estimate that AMZE could open between 0.38 and 0.43 in the next session. The direction will likely depend on whether the market focuses on the company's widening losses or the positive news around acquisitions and revenue growth. If sentiment turns positive, a quick pop to 45 cents is possible. Otherwise, further downside could test recent lows. Key support and resistance levels are in play. The pivot point sits at 0.483, with support at 0.326 and resistance at 0.565. The current price is below the pivot but above support, suggesting a test of lower levels is likely if selling continues. Bollinger Bands show an ultra-wide range, with the price hugging the lower band, a classic sign of high volatility and potential for sharp moves in either direction. AMZE's intraday trading style is best described as a high-volatility whipsaw with a bearish tilt. The stock tends to make sharp moves above or below key levels, often driven by news or volume spikes. Traders should be prepared for rapid reversals and wide price swings, especially near psychological levels like 40 cents and 50 cents. Managing risk is crucial in this environment. Average true range (ATR) projects a possible high of 0.611 and a low of 0.203 for the next session, nearly a 99% range. This reflects the recent pattern of 50% plus intraday swings, especially around earnings releases. Such extreme volatility can create both opportunities and risks, so traders should use stop losses and avoid overexposure. A bullish scenario: if the money flow index remains above 90 and the Amaze histogram expands, AMZE could break above resistance at 0.565 and target the Bollinger Band middle at 0.854. This move would be fueled by the company's explosive revenue growth, synergies from the food channel acquisition, and momentum from the Adobe India partnership. A short squeeze could push the price as high as 65 cents in the near term. The flip side: a bearish scenario could unfold if the market focuses on AMZE's widening net losses and negative distribution signals. In this case, the price could breach support at 0.326 and fall toward the lower Bollinger Band at 0.1, extending the recent 88% slide. Delisting fears and continued institutional selling could drive the stock as low as 20 cents. Neutral scenario would see AMZE grinding sideways around the pivot point at 0.483, with volume fatting as the market digests Q3 results. In this case, the stock could consolidate as the company works toward its Q1 2026 profitability target. This period of indecision might set the stage for a bigger move once new catalysts emerge. AMZE's risk-reward ratio currently favors downside protection for short sellers, with a ratio of 23.37. The stock's high beta of 1.64 means it's more volatile than the broader market, amplifying both risks and potential rewards. For traders, this means opportunities for quick gains, but also the risk of sharp losses if the trend reverses unexpectedly. Psychological price levels play a big role in AMZE's trading. The 40 cents floor and 50 cents ceiling are key areas where traders often enter or exit positions. Moves near these levels can trigger sharp reversals or accelerations, especially in a high volatility environment. Keeping an eye on these psychological markers can help traders anticipate potential turning points. Now, AMZE remains a high-risk, high-reward play. The technical score is max bearish, but the momentum score is deeply negative as well. Short sellers may find opportunities on trend continuation, while aggressive traders could scalp oversold bounces near support. However, long positions should be avoided unless there's clear volume confirmation and signs of a reversal. Microcap stocks like AMZE can be unforgiving, so discipline is key. Summary: AMZE is locked in a vicious downtrend, with technicals and sentiment both stacked against it. Yet explosive revenue growth and strategic acquisitions offer a glimmer of hope if the company can narrow its losses and deliver on profitability targets. For now, caution is warranted. Trade the trend, manage your risk, and stay alert for any signs of a meaningful reversal. Thanks for joining us for this technical breakdown of AMZE.